Do you believe that this is a good time to purchase Tesla stock? Extreme volatility has been seen in Tesla stock, both upward and negative spirals. Concerns over where it will actually be in the upcoming years have been growing. If you're interested in purchasing Tesla stock, be sure to keep an eye on things and stay attentive. Tesla stock is currently trading at $725.60, having lately dropped to about $650. Investors are worried that the stock might decline in the upcoming quarters, despite the recent increase. Undaunted, investor Kathy Wood, a proponent of Tesla, even suggests that investors purchase Tesla stock in tandem with her. She and other bulls are still optimistic about Tesla stock. They still have hope that Tesla will continue to operate profitably in the future. You can determine whether this is a good moment to purchase Tesla stock by watching today's video. The current state of the economy has caused Tesla stock, along with other equities in the market, to experience a negative spiral trend. Numerous issues have affected the economy of today, such as the Russia-Ukraine conflict and the COVID-19 pandemic. This has led to questions about whether this is a good moment for investors and investing enthusiasts to make investments with their hard-earned money. However, a recent piece indicated that although the valuation of Tesla stock is approaching reasonable levels, it might not remain there for long. Tesla stock has experienced a wild decline since CEO Elon Musk revealed his intentions to purchase Twitter. However, recent reports about Tesla's car production have been nothing but positive. Production increased 69 in Q1 over last year, which led to an 87 increase in automotive revenue. Tesla is making more money on each car it makes because revenue increased more quickly than output. Price increases implemented throughout 2021 and improvements in production efficiency for its more expensive Model S and X vehicles account for a portion of this gain in profit. The bottom line is feeling the effects of this sales growth as quarterly net income increased by 658 year over year. Tesla's 17.7 net income margin, which ranked it among the best in the auto sector, was even more astounding. Tesla's luxury car margins are getting closer than management did. In fact, provide investors with some excellent news. They state that over a number of years, they hope to increase car deliveries by 50 yearly by modeling revenue growth and maintaining its 17.7 profit margin. Tesla may conclude 2022 with $14.09 billion earnings if this estimate is followed. Accordingly, Tesla is trading at 49.5 times its total earnings for 2022. For a business that anticipates growing by about 50 a year over the next 4 years, this valuation is not too awful. Despite the numerous problems Tesla has been having and the decision made by investors to sell their shares, the firm is still growing and developing quickly on all fronts, strengthening its cash flow and balance sheet in the process. Investors were unsure about what to expect during multiple COVID-19 related plant shutdowns at Tesla's Shanghai location. However, Tesla went above and beyond their expectations. The company's overall sales of $18.08 billion, up 80 from the previous year, were $918 million higher than what Wall Street had predicted. Similarly, its non-GAAP earnings per share of $3.22, a 246 growth, devastated the consensus projection by a massive 42%. The company completed a record-breaking quarter by increasing overall production and vehicle deliveries by 69 and 68, respectively, to produce 305,407 vehicles and deliver 310,048. Investors should anticipate a multi-year period of 50 average annual growth in deliveries as per management's guidance. Analysts are projecting a top line and an adjusted bottom line of $86.05 billion and $12.32 per share in fiscal 2022, respectively. These figures represent strong year-over-year increases of 61.82. Apart from these remarkable advancements and successes, the balance sheet and cash creation of the organization are also doing exceptionally well. Tesla reported in the most recent quarter that its total debt, which does not include funding for energy products and vehicles, dropped below $100 million. The phrase cash is king is also being lived out by the business. On the other hand, free cash flow reached $2.02 billion in the first quarter, an incredible 606 increase. Given that the worldwide electric vehicle industry is expected to grow at a compound annual growth rate of 25 in 2028, when it will reach almost $1 trillion, one could confidently state that Tesla is well positioned for continued success in the years to come. According to tsla, it delivered 310,048 cars in the first quarter, which is 68 more than it did the same time last year and somewhat less than analyst projections of 312,000. As was previously reported, experts had anticipated a lower amount because Tesla's Shanghai electric car production had been stopped due to COVID-19, which created significant logistical challenges for the company when delivering units to consumers in Europe. In a note to clients, Wedbush analyst Dan, I've said, would you put your hard-earned money into Tesla stocks today? Please share your opinions with us in the space provided for comments below. The Investors Business Daily Shares Checkup tool, which rates stocks, gives Tesla shares an IB composite rating of 95 out of 99. An American newspaper and website covering worldwide business, finance, economics, and the stock market is called Investors Business Daily. They claim that, based on the CAN-SLIM investment paradigm, growth companies with a composite rating of 90 or higher are the best options for maximizing prospective gains. Additionally, the stock has a relative strength rating of 87 out of 99, meaning that over the previous 12 months, Tesla stock has outperformed 87 of all equities in the IBD database. Additionally, it has a C accumulation distribution rating. This grade examines changes in stock price and volume during the last 13 weeks of trading. The lowest grade of E denotes significant selling, while in a grade indicates significant institutional buying. Consider the grade of C to be impartial. The ascent of Tesla has been extraordinary. It's remarkable that sales hadn't even surpassed $1 billion in 2012. Revenues have skyrocketed, rising 71 in 2021 compared to 2020. With an 81 year-over-year increase in overall sales, Q1 2022 was even more remarkable. As the business grows, margins are expanding, which is a great indication of future profitability. The rise in margins indicates that Tesla is not compromising on profitability in order to expand. So, is it wise for you to purchase Tesla shares right now? Before choosing a choice, it is advised to think about these 3 inquiries and the responses that go along with them. Fun. Will diversions like Twitter harm Tesla stock? It was previously reported that some investors were uneasy about Musk's Twitter shareholding, with some even questioning whether the CEO had turned his attention away from Tesla and towards another project entirely. 2. Will rising petrol prices lead to more demand than inflation? The price of petrol is a major factor in the higher costs that consumers are bearing. While high petrol prices may encourage individuals to switch to electric cars, rising prices across the board, particularly for petrol, may make it more difficult for consumers to buy new cars. 3, will Tesla's competitive edge be diminished by competition? Despite being the industry leader in the production of electric vehicles, Tesla is quickly being followed by a number of other automakers. If you're considering purchasing Tesla stock, you should be ready for the firm's notoriously volatile share price movements, which are a defining characteristic of its performance. The following are the few things you should be aware. Ensure that a brokerage account is open for you. Generally speaking, you should look for a brokerage account that offers free trading tools, no account or inactivity fees, and no trading commissions. It should be noted that Roth IRA can be a suitable place to deposit your money if you're purchasing Tesla shares for retirement because you think the firm has great future potential. This is due to the fact that qualified withdrawals from a Roth are tax-free, meaning that unlike with a standard IRA, you won't have to pay Uncle Sam for investment gains, which might be significant with a firm like Tesla that could develop quickly. So, examine the foundations of Tesla. Verify that you truly understand what you're getting into. Recall that you are buying a little stake in a real company. You can thoroughly examine Tesla with the aid of its income statement, competitors, management, and balance sheet. 3, choose whether or not to purchase Tesla shares. 4, establish a spending limit before buying Tesla stock. Your ability to invest a certain amount of money will particularly determine this. Aiming for 3 to 6 months worth of spending is advised by experts. But even $500 to $1,000 is a smart place to start. It's a good idea to take into account when you'll require the funds for your Tesla investment. Generally speaking, you should only spend money you won't need in the near future in the stock market, and you should consider Tesla as a long-term investment. This means that your stock market investment should last 5 years or longer. 5, choose the right time to purchase Tesla shares. Purchasing Tesla stock at a particular share price, purchasing Tesla stock immediately, or purchasing Tesla stock gradually are your 3 alternatives. Some might even question how Tesla's profit margin is so high in comparison to traditional automakers. First off, Tesla doesn't have to split earnings with dealers because it sells directly to customers. Furthermore, it only focuses on electric cars or EVs. To find out more about Tesla stock, see our other videos